the leases, as you've heard, don't appear on the balance sheet today. So we took a stab at this. We've been doing this for a while, and so we have a lease template. We treat it like a sausage machine. We use it to crank out stuff. And so we look at the term structure of the leases and make some estimates and use some discount functions, and you get a lot of ancillary information as a result. But primarily, you're interested in answering the question of how leveraged this firm really is. And so typically, you find leases in the retail sector that you know about. That's where it really shows up. And then you get some other stuff that is just interesting. So using our discount function, we took a shot at this. We do this, annually every summer because most of the annual filings where the good lease data are in by late spring, early summer. And so you look at the S&P 500 and you can sum up the lease liabilities on average about $1 billion per firm. We looked at several 1,600 firms roughly outside the S&P with about 115 million on average each. It gives you just setting the framework a little bit. And then when you look at the big firms and the total dollars of leases that they've got, here they are. This is the top 10 firms in our sample with total lease liability. When you look at what the implied leasing years are, you can all do this by yourselves as well with a little help. So this is nothing major here. The ratio of the term structure, ratio of year 1 lease versus year 5, that's important to some people. And then what does that mean versus the total liabilities on the balance sheet? How levered is this firm? So you get a feeling for it. Okay, nothing sticks out here too much. But then it starts to get really interesting. So if you think about it a little bit, and you start saying, okay, we're going to have to put these leases back on the balance sheet. What are the implications? Todd mentioned earlier the ratios. You've got a lot of liabilities. You're going to have to offset those with some kind of asset because the firm has, if you have a 30-year lease, you could argue, they actually have that property. So it's an asset. So you've got to offset the liability with some kind of asset. It's going to affect the return on the assets if you use that as a scoring mechanism for your security. It's going to affect ROE. And if you have two firms in the same industry and you're scoring them on ROE, one leases its assets, one doesn't, they're going to look a lot different after this is done. That's the fact. So we looked through our data and we said, okay, these are the top 25 firms with the implied lease liability increase. And some of these numbers are big. So you look in the top, Chipotle has total lease liabilities, this is all discounted, of almost $2.3 billion. Now that includes the 5 years that they report as well as the thereafter period. The total liabilities that they show on their balance sheet today are somewhere in the neighborhood of $600 million. So just pause for a moment and think about that. It's a very levered firm. So there are potential implications there. The one that really got me was Yelp, the third one in the list. Like, what the heck do they lease? I couldn't figure it out. I mean, I thought they'd be, like on the hook to either Microsoft or Amazon for the cloud, but I mean, what do they do? Are they leasing bikes for their, what is it? I don't get it. Anyway, so this is kind of interesting. We get to play with stuff. Have at it. I don't know the answer. All I do is I get this. I'm a catcher, I just give the pitcher the signals. The pitcher's the one. They don't say. They don't say. But, if you want to call them up, if anyone's on an investor call with Yelp, ask them, guys, what are you doing? This is the data aggregated up by sector. You see it there. And then this is some interesting stuff here. So this is from last year's Whole Foods filing. So now you know why Amazon bought Whole Foods, right? It's the distribution network. So Jeff Bezos is now sitting there with stores in these massive cities to distribute his stuff. Some of the leases go as far out as 2054. Pretty nifty, smart guy. But here again, you see it, right? So you can see the operating lease column right here, $433 million in obligations for fiscal year 2017. But you look at the thereafter period, the future fiscal years, that's a big number. And here's Chipotle's, just for those of you that were wondering if I was, not telling the truth. I was telling the truth. There's the number right there.